What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday and it is Veterans Day. And I want to take a quick moment to thank all the active and former and sadly the veterans that cannot be with us here today. Your service and your tireless efforts to defend this wonderful country that I live in is greatly appreciated. And we owe this day to you. I'll be thinking of you today. Thank you so much for your service. But it also means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, which all seem to be up at least 10% this week. I don't think we've had a week ever like this in the history of this show. Now, I do want to make a note in the right-hand corner of the screen. You will see the current time. That is 8 a.m. Pacific time, 11 a.m. Eastern time. So I am recording this during the trading day. I'll make note of that as we refer to these prices. But we kick things off like we always do with Meta Platforms, which is skyrocketing, starting the week at $93, and now currently up 20% in 1 week, up to $112 per share. This is why you have to pick a price on these stocks and move, because they can move very, very quickly. Meta to cut 11,000 jobs as it looks to slash cost and affirms its revenue outlook. Actually, two very important stories in this one headline. Finally, Mark Zuckerberg grew a sack. He's been hinting that, oh, some of you that work at Meta might need to leave. We might need to make some cost cuts. Finally, look, this is not an easy decision, but this is why you make the big bucks as a CEO. You got to cut headcount. We looked at Meta's financials just a couple of weeks ago. They were a disaster. He was going to bleed through all of this company's positive cash flow unless he made some major changes. Well, instead of curbing his stupid little goggle project, he decided to curb 11,000 jobs. We'll see where these jobs, I haven't seen a lot of evidence of where these jobs, is this from the ad unit? Is this from Meta Platforms? The metaverse division of the company will end up seeing this, but we also got a second important headline, the fact that the company kind of reaffirmed their outlook between $30 billion and $32 billion. A revenue consensus was right at 31.6. So I tell you what, if they can come towards the high end of that estimate, that is good. What this is also showing you is that maybe we finally have a stabilization in the ad business. Obviously, as you know, if you've been following this channel, Meta's ad business has actually been on decline year over year, even kind of sequentially quarter over quarter. This might show that we finally have a little bit of stabilization in this business. This is obviously why the stock is up 20% over just the last couple of days. Now, Mark Zuckerberg says he's accountable for the company's coming big layoffs. You think, Mark? You think you're accountable? You think you're at fault? It's about freaking time. This is 6 months too late, but it's about time you've started to take some accountability for the disastrous performance of this stock. As while it's up 20% over the last 5 days, tell that to anybody that's been holding the stock for even 6 months. It's down 42%, and year to date down 66%, even after being up 20% in 1 week. Now, we have newly minted Senator Marco Rubio and another representative, Mike Gallagher from Wisconsin. They are seeking a ban on TikTok, and I think we're starting to know why a little bit more, why now the Republican Party is going to be pushing hard for a TikTok ban. Is that I saw a lot of news stories that the Democrats very successfully drove out younger voters, particularly attributed to TikTok. They were advertising and pumping influencers on that platform to really get the younger people out to vote. And that what looks like there was a lot of predictions on a far greater Republican victory in the midterm elections on Tuesday. And that got squashed, particularly because young people got out and vote. And so you better believe Republicans will probably keep trying to go after TikTok, since that is their greatest competition in terms of driving out that younger vote. So instead of presenting ideas for young people to vote for you, they'll just ban TikTok. Now, Facebook to receive an antitrust charges over its marketplace ad platform. I applaud this. Actually, you know, here watching the show, I'm very much on the side of less regulation, less oversight on this company, because look, I'm a greedy shareholder. Less regulation, less oversight. Chances are you might make a little bit more money, but I do buy ads on Meta and other places, and there's no visibility. There's no transparency in these marketplace ad platforms. And so I think a little bit more visibility from the kind of the advertiser perspective actually would be a good thing. Moving on to Apple, start of the week at 135. This one did a U-turn, up 8.7% to now be closer to $147 per share. Again, I am recording this during the trade as it goes on. Apple warns of lower iPhone 14 shipments due to China's virus issues. I mean, we're getting news stories out of this every single day, but an iPhone factory in Zhengzhou, still subject to virus restrictions in China, lifts the lockdown. I mean, it's just constantly back and forth over in this country. But here's probably the most important news is that Apple's partner Foxconn says it will tweak production to avoid holiday disruption. And even more importantly than that, Foxconn says it's going to raise its workforce in India iPhone plant by 4 times over the next 2 years. It's believed that Apple's looking to move at least 5% of its iPhone production to India. My guess is it's going to be much, much higher than that as time goes on. Apple announced a $450 million investment to power its new emergency SOS service on the iPhone 14. This was like the one feature they spent a lot of time on when they announced this phone. So they're still like rolling this out. I still don't think it's available. Most of this investment is going to go to Global Star, which is like a $2 penny stock. So good luck with that investment. Moving on to Amazon, start of the week at $90, is now closer to about $100 per share. In fact, I think it was over 100 earlier today. That is a 9.5% gain on Amazon as it launched a review of its unprofitable businesses, eyeing more cost-cutting measures. And this is the cleansing Silicon Valley needed. I know Amazon's up in Seattle, but it has kind of the same attitude where it was kind of growth at all costs. Don't worry about profits. Don't worry about efficiencies. Just hire as many white-collar workers that sit around sipping lattes as you possibly can without worrying about shareholder profits. Well, I think this is fantastic. Certainly, there's going to be some pain in the shorter term, but one interesting story that came out of this is the company is looking particularly hard at its loss-making or its kind of loss leader business of Alexa, which enlists over 10,000 employees. And I heard a rumor on CNBC that this is a business unit that loses $4 billion a year. Now, the business unit itself doesn't necessarily have to make like a minting of profit because Alexa goes into so many verticals that Amazon has, but just shaving down some of these things to maintain some levels of profitability, I think are a good thing, while not sacrificing kind of the core growth story over at Amazon, I think is what these companies need to go to. Now, Amazon is expanding its Rivian zero-emission vehicles for delivery in more than 100 more cities. Now, obviously, Amazon has a pretty large investment in Rivian, which is a stock that is, like most stocks, has just kind of fallen off the map. This obviously also has the ability to kind of cut those vehicle emission costs as well. Now, here's probably the most important news of the day for Amazon is it debuted Sparrow, a new bin packing and picking robot arm. And here's a video of it kind of in action here. It basically has suction cups and it's kind of picking up packages and picking up products. This is what we need more of. We need more automation, more efficiency inside of Amazon to start driving those profits because the company has the revenue. I mean, we're looking at a company with $400 or $500 billion worth of revenue in a year. Now we need to start cutting costs and start generating massive profits off of that revenue. Moving on to Netflix, start of the week at $256. That was your chance. We talked about for weeks when we get over to the technical segment, it was going to back test to a trend line. It hit it like on the penny. That was your chance to buy because it reversed very quickly off of that level, up 10%. I am now a proud shareholder of Netflix. I'm probably going to sell later today, at least take some profits, up to $283. Again, we are recording this during the trade because I love Netflix's execution over the last. This has been very well telegraphed here on the show. And if you follow Netflix closely, this company has really telegraphed that they are doing all the right things. Whether or not they all work out, I don't know, but I love the direction this company is moving on, is they are moving into live shows in 2023 with a Chris Rock special. The company already has a great product and a great formula with what they do now. Now it's time to layer on other things, live specials like with a popular comedian like Chris Rock, who obviously got slapped on stage by Will Smith. So I think it'll draw eyeballs just in that sense that we'll want to see. He's probably got some jokes based on that, and I probably will tune into that. Now, here's the other thing that they're going to start laying in. Potentially live sports over at Netflix as they potentially bid for ATP Tennis Tour rights. Now, here's the interesting thing that Reed Hastings, who is still one of the co-CEOs over at Netflix, he said he does not want to get into a bidding war every few years and actually could look to buy stakes in the sports leagues. So that's actually a very interesting strategy. We've talked about it when we've looked at Apple and the fact that they could literally buy like half of the NBA based on like the NBA contract that they're trying to sell Apple or ESPN or any of these networks. Well, Apple could actually afford to buy probably about half of the teams in the NBA. And so it'll be interesting. Obviously, the ATP is not a team-based league, so it'll be interesting if Netflix can provide equity stakes in these, quote, kind of smaller sports, not like the big 3 or 4 major sports out there. Well, maybe they can get some rights by investing in the leagues themselves. Moving on to NVIDIA, started the week at 141. This one just continues to rocket higher, up over 12% to be closer to $160 per share. This was also a very good move by NVIDIA this week as they launched a new chip that China can import into their country based on these controls that were passed down, I believe, a few weeks ago by the Biden administration. A great example of how regulation comes down onto these companies and they quickly evolve and they meet the needs of the regulation and still meet the needs of their shareholders by exporting chips into the country of China. Taiwan Semiconductor surges this week. That's ticker symbol TSM, as foundry giant says October sales rose 56%. So we're seeing all these rumors about how Apple's having production problems. Well, Apple is obviously probably TSM's biggest customer right now, and all the chip stocks rose. This is obviously bullish for everybody. Intel, AMD, NVIDIA, Apple, anybody that's using Taiwan Semiconductor. Obviously, there's just a massive surge in buying from this company. I don't know where that demand is coming from, but obviously it is there, and that what's drove a lot of the share prices this week in all the chip stocks. Moving on to Google, start of the week at 87. We're now closer to 96. That is another stock in this group up over 10% in just 5 days, but not a lot of news out of Google this week. Moving on to Microsoft, start of the week at 222, and you guessed it, this one's up about 9.5% to $242 per share. Boy, you better go look at your IRA accounts. I bet they're looking good over the last 2 days. The EU opens an in-depth investigation into Microsoft's planned $69 billion acquisition of Activision. We talked about how on last week's show, how Microsoft kind of balked at kind of giving any concessions. I theorized on some things. I got a really good comment that somebody said, well, Microsoft knew that it was going to go to an in-depth investigation, so they might as well just balk at that and then start dealing with the EU during the in-depth investigation of this Activision deal. We got more news on that as the Take-Two CEO, which had their earnings earlier this week, he said he has no concerns actually with the Microsoft planned Activision deal. I think it's probably because he sees the valuation that Activision is trading at, and he's like, well, that's not bad for Take-Two. And he probably also wants the option to be able to go out and make another acquisition, maybe himself, or be acquired himself, and not have a quote that he didn't really favor the Activision deal when that was going through. Now, Activision also reported their earnings, and they're saying that the $69 billion sale of Microsoft remains on track for a June close. Now, this is a little tricky headline, is that it really what it means is by June. So Microsoft's fiscal year actually ends in June. That's actually its Q4. And so between now and June is when this deal is expected to close. Certainly it could close in the month of June. Now, Activision Blizzard rose earlier this week as Raymond James upgraded on the likelihood of that Microsoft deal closing. I think as we get closer and closer to the length of this deal, the longer it goes, it probably will end up going through. Finally, the one stock that is down this week is Tesla. Start of the week at 203 and has just languished all the week, down about 6.7% to be around $190 per share. We're currently at about 8:30 Pacific time during regular trade. Now, Tesla added 43 supercharger stations in the mainland China in October. That's obviously more than one per day. And I think I've heard Elon Musk discuss that the margin on the superchargers is they try to make about 10%. So for every dollar that is spent at one of these supercharger stations, Tesla's making about 10 to 15 cents in profit. So these supercharger stations, while they're not really showing up on the company's financials, the more and more you grow of these certainly will be a bigger piece of the pie. Now, Tesla's Shanghai, China plant exported a record 34% vehicles year over year to 54,000 vehicles. We also saw that local sales in China actually grew 25% year over year. There's obviously some worry that demand in China due to the economic conditions in China, but also we saw that Tesla was cutting prices in China. You're still seeing some growth there. Obviously, we'll see in subsequent quarter how that demand is holding up. But obviously, not all of those vehicles that are made in China are shipped to the country of China. Many make their way outside of that country. Now, Tesla is said to be cutting back on its solar projects across multiple regions, including out here in California. This makes a little bit of sense. I've been following the solar business just a little bit, and it looks like pricing has just really gone up. And then on top of that, think about the consumer. Okay, the consumer is already stretched. Some of them, looking at their energy bill, probably would like to bolt on some solar panels, but number one, they're very expensive. So a lot of people will finance their solar, and obviously with interest rates ticking up, it reduces the payback on the solar. On top of that, a lot of people are probably refinancing and cashing out of the equity of their home to then bolt on solar on the top. Obviously, the refi business under pressure as well. My guess is you're looking at least a 12-month period where solar is probably not going to be that good of a business, despite there probably being some significant demand there. Now, filings show that Elon Musk disposed of $4 billion in Tesla stock this week as he is trying to take care of that Twitter. And I know this has a lot of Tesla shareholders kind of pulling their hair out. I would just tell you all, focus on Tesla. Forget about Twitter. If Elon Musk has to blow up his entire Tesla stake to save Twitter, sure, will that negatively impact Tesla in the shorter term? Maybe. Certainly looks like it today, but you've got a company with a $560 billion market cap on it. You have to ask yourself, could this be $1 trillion in 3 years? Could this be $2 trillion in 5 years? Given the market opportunity for electric cars and the fact that competition is continuing to languish behind Tesla's efforts at producing electric cars, well, I think they've got a chance at it. Moving on to the technical segment of the show. I'll remind you, up in the right-hand corner is the current time. We're at 8:30 a.m. That is 11:30 Eastern time. We've got many, many more hours in the trade, but typically on holidays, things kind of drift in those after hours as all the major traders go on. But boy, we had a monster rally this week in the S&P 500. We bounced off this very critical area of support at 3,600 just a couple of weeks ago, and we have rocketed higher. We are making our way up to the top of the channel. That looks like where this one wants to go. If you are bearish these markets or you've missed opportunities to sell, you want to raise some liquidity, here's your chances, as this rally is likely to maybe potentially peter out here at about 4,100 on the S&P 500. Then we would expect, based on this technical pattern, which has been on place all year, to come back and retest another low. Now, not necessarily all the way back. It could be that the October lows end up being the lows. It may not. We'll have to find out when this market finally retreats. A stronger move from the S&P 500 would be actually to break out of this technical pattern and retest 30 or 4,300 on the S&P 500. If you're able to retest and even exceed that area, that would be a tremendously bullish move, and that would raise the probability much, much higher that when you have a pullback, that you would actually probably back test to this black line, if not maybe back to a higher low, creating the beginnings of an uptrend. Will be keeping very close tabs on that on this show, and so will everybody else. Now, speaking of close tabs, moving on to Meta. Holy reversal. This one took a gigantic U-turn and has been skipping patterns here, and we are closing this gap that we had after earnings very, very rapidly. Now, the stock should meet some resistance, almost where it is right now. If you draw this downward channel line, that acts as a natural level of resistance. If Meta is able to pop its head up over that, you should have some resistance back here where it was pre-earnings, right about 129. If the momentum can stay, that would be fantastic, because chances are you will have reversed from about $90, probably close to $150 per share very quickly with this one. I don't think that's the likely scenario. I think we kind of crap out where we're at with Meta, and then we do a back test somewhere maybe slightly higher than the lows. I see the 52-week low on this one's 88. I could see this one coming back to 90, 95. And if you like Meta, you like the longer term story, you like the fact that you got about a $295 billion market cap on this one and over $30 billion of revenue, and Mark finally making the tough decisions over at this company. I think the thesis to get into Meta gets a little bit more clear as Mark is starting to deal more with reality than kind of his virtual reality that he's dealing with over the last couple of months. Moving on to Apple, found a beautiful area of support here at 136. What I notice is the reversal here at 136 created a higher low on this one. That's certainly in the shorter term, kind of a bullish move, not only with Apple, but the larger market. This one, though, needs to continue to rally. You really need to go from where the stock is right now at about 145. You need to get through an area of resistance here at 150, and you need to at least retest like 158, 160 on this one. That was the previous highs. Otherwise, you'll just be kind of doing this type of thing where we're really not sure of the direction of Apple, where you're making very steep lower highs and just kind of shallower higher lows. So you'd like for the rally to continue in Apple heading into next week. That would confirm that at least in the shorter term, we're trying to make a new uptrend there. Now, moving on to Amazon, it also made a U-turn very steeply here, bottomed out really earlier in the week down here at about $85, $87 per share, anywhere in this green box. When we're talking about the valuation, now over $1 trillion, but it was south of $1 trillion on Amazon. You're looking at a company with $500 billion worth of revenue projected over the next year or two, and they're finally starting to rein in those costs. It's a company that maybe not from a net income or an EPS perspective, but maybe from a positive cash flow perspective, can really start to turn things around. That would surge this stock much, much higher. But my guess is Amazon's going to hang out in this green box for a while, down to about $85, $90 per share, up to about 100 before we see confirmation of those efforts taking hold. Moving on to Netflix, this is probably the one that we have just predicted perfectly from a technical perspective. And it's not really me, it's the technical pattern has played out perfectly. It doesn't always play out perfectly, but I tell you what, when it does, it truly makes you a believer in technical analysis. We talked how after earnings, the stock really rocketed up over this 250 level that it was kind of hanging out for a while, like many months. It was hanging out kind of between 220 and 250, broke out over earnings. And I said, don't worry, relax, don't chase this stock unless you want to do some very short-term momentum trade. Don't chase it. It's going to reverse. And when it was going to reverse, it was going to likely backtest to this green trend line right here. And that's exactly what it did. It hit it right on the nose. I didn't get it right on the nose. Okay, I got it like $4 or $5 higher than my price because look, everybody's looking at this, and this is a stock that is traded so technically from a technical perspective. I didn't want to miss my opportunity. Picked up some shares, and we've done the very, very predictable thing is we've bounced off this trend line and we've retraced kind of halfway to the highs. I will be peeling off some of this position today, lock in some profits. That doesn't necessarily mean that's what you need to do, but this is what I do in the shorter term. When you have like go from 250 up to 280 in 3 days, yeah, you're going to want to lock in some of those profits. Moving on to NVIDIA. This one is just looking so good. Is in a gigantic steep uptrend off the lows that we made down here about 115, and it's just rocketed higher. Now up closer to 160. Now 160 should be an area of resistance. It was some highs. It was some support back in these areas. If you like NVIDIA, I wouldn't necessarily chase it here. I think there's a strong probability a lot of these stocks hit some resistance level, a lot of short-term profit taking like I was talking about with Netflix. This one could pull back, and you should now pull back to either back test to this red trend line, which might not be drawn in perfectly, but somewhere in like kind of the 130 to 140-ish range is a back test. If you like NVIDIA, you like the uptrend, you think these are the bottoms back here in October, well, yeah, you're going to want to buy that first pullback. I'm not convinced of that. You've still got a really big valuation on this company, nearly $400 billion, and this is a company that's doing, I think, about $25 billion worth of revenue over the next 12 months. In some scenarios, that makes sense, but when a lot of these stocks are still just so gigantically beaten down from their highs, I still think there's better opportunities here, but boy, the volatility and the upside NVIDIA certainly there. Moving on to Google, this one also reverse course. It was down here about $83, $85 per share, which I heard from a number of investors that was their spot. I tell you what, if that was your spot, you had basically a day or two to get it at that spot. That's why we've really pounded into this show is pick a level. You're not going to be right even a high percentage of the time. You're not going to be right 100% of the time. You might even be wrong most of the time. That is really beside the point. It's pick a level that you like a stock. It could be from a technical perspective. It could be from a valuation perspective. It could actually be a combination of both of those things. It's like, hey, if this stock gets to this valuation, it'll also touch this technical level. Make those decisions in advance. And if and when the stock pulls back to that level, pull the trigger. Now, it doesn't have to be on your entire account. In fact, that would be stupid. It could be one share. It could be half a share, a tenth of a share. Just get that discipline. And I promise you, if you work that discipline into your investing playbook, you will be a much, much better investor and you'll be able to get these stocks at very nice prices. Now, this one's reversed. If the momentum stays in the stock market, this one's probably got a long way to go. Now, it will reach some very heavy resistance, basically right where it's at, between $95 and $100 per share. If it's able to bust up over that, you've got a level here at about 106, which should act as some resistance. And then finally, you've got the dominant trend is these lower highs. It wouldn't surprise me if you come all the way back up here to about 109, 110, and you will meet some resistance. Really, for this downtrend to be over, you need to bust all the way up here to 121, which would be another, what was that, like maybe 30% upside in this one. Seems unlikely, but obviously this stock moved over 10% in a week, so I guess it's possible. Moving on to Microsoft, this one's interesting. Okay, it's been in this very tight channel, very predictable channel over at Microsoft. I suppose you can move this channel line down, but I like to keep them really tight, capture as many of the dominant candles inside the channel. And you've noticed with Microsoft as we bounced perfectly down here at 215, came all the way back to the middle of the channel. I have a thin red line here in the middle of the channel. Oftentimes these stocks make kind of a 50% move through the channel. You see numerous times Microsoft has moved about halfway up the channel and then got rejected. Well, it actually kind of peeked its head up over it this week. So that raises a small probability that we come all the way to the top of the channel up here at about 255 on that one. If you get rejected here, chances are you're making or at least retesting these lows down here at about 216, 210. From a valuation perspective, from a technical perspective, not the worst place to accumulate Microsoft shares. Finally, move into Tesla, which was the lagger of the week, now down on the day, close to about $189 per share. This one broke through our trend line here that was really holding. I guess you could move it down. I hate moving trend lines, but you can move this down a little bit here, but it still broke through it. I would say that trend line is over. And now what we're looking at is just this very steep down channel that Tesla is creating. I actually like it when stocks I like, profitable stocks from a cash flow, net income, operating perspective, they get in these down channels. This could really accelerate. And we've talked about here on the channel, there's an area of consolidation with Tesla down here at, we'll call that like 150. You can plus or minus $10, $15, maybe even $20 on this one. This looks like where it's heading because we broke through areas of support. There were other areas of support here at about 182 we're trying to hold that level at 182, but boy, when you are in this channel, something's going to have to turn this thing around. And it just seems like a lot of investors are focused on that Twitter deal and the fact that Elon Musk has to sell his shares. Look, Elon Musk selling his shares, that's too bad for him, but man, it can create some opportunities for other investors as well. We'll be monitoring Tesla next week, as if you do break this kind of 180 level, yeah, you're probably coming down to 130. That would be a very interesting level from a valuation perspective. And on top of that, I think Tesla talked about a buyback sometime next year. Well, the lower the stocks goes, the more effective that buyback will eventually be. Hopefully you guys have a great day. Again, thank you to all the veterans out there. Have a wonderful weekend. Be safe, have fun, and we'll see you again next week. Good luck with your investments.